Good morning, students. Welcome to the Costing and Management Accounting Employee Cost as a topic for the day. So today we are going to talk about how to manage and be cost effective in the employee cost. So far, we have learned about material costing. Material is a very important element of cost, and today we'll talk about employees or labor cost. This is the second element of cost, and it is very important element. We have different types of industries, you see. Some industries are material intensive, where material is maximum used and processes are automated. Whereas some industries are labor intensive, particularly if you look at the handicraft industry. And some industries are a mix of both material and labor. So you have to ensure that this element of cost is also effectively managed. It's properly managed. Only then the cost of the product can be minimized and it can be sold at profit, particularly if you are in a labor intensive industry. But there is one very special impact when you deal with the labor, when you deal with the workers. This is because the workers are human beings. So there is also a behavioral aspect which is attached to this cost. So just like material, even if you can reduce the material cost to very minimum, it is not always appropriate to try to reduce the employees' cost to very low because we want the employees to be motivated, productive as well. Therefore, one has to be very careful when you are dealing with the employees' cost. So before we go into deep into how we do this and look at the various kind of problems and the questions that we face, let us first understand what are the departments which play a key important role while managing the employee cost. So first department that comes into picture is the personnel department. The role of the personnel department is to ensure that right kind of employees are selected and they do the right kind of a job. They are trained and they are also rightly selected. The interviews, the selection process should be proper. So whenever there's a need for human employees, whenever there is need for employees in an organization, this department will make a request to the personnel department that we need employees for this particular purpose. So when we need employees, the personnel department comes into picture, conducts interview, ensures that right employees are being selected and they are inducted and trained in the organization. A second department that is key here is called the engineering and work study department. The role of this department is to ensure to do time and motion studies. Time and motion studies will tell you what should be the standard time to do a job, what is the right way to do a job. To ensure that we have proper uh, work study selection process, after selection process, we'll see that engineering and work study department will do all these studies. Job analysis, what does the job require? What is the job description specification? What is the job evaluation? How do you rate a job? Merit rating, and all these things is the job of the engineering and work study department. The third department is timekeeping and time booking department. Timekeeping and time booking department will ensure that what is the time that the worker is spending in the factory. So we'll talk about time booking and timekeeping department. So we have to see here when does the worker comes into the factory? When does he leave? So that's timekeeping. So we're keeping a record of how much time does he spend, and time booking is within that time, what does he do? So on what jobs does he work? The fourth department would be payroll department, whose job would be to ensure that all the workers are paid right amount of wages and timely, to ensure the payment of right kind of wages. So calculation of what wages are to be paid and to which worker, how much should be the wage, what should be the how much time did he spend. So it will take inputs from two particular departments. From timekeeping and time booking department, it will pick up what kind of time did the worker spend on the job. And from the HR department or the personnel department, it will pick up the ranking of the worker as well as on what role he was, on the basis of which the wages of this worker would be calculated, on what scale he was, and what are the payments, on what basis the payments are to be made to this worker. And finally, the cost accounting department, which will keep a record of job of the total cost incurred in the payment of workers or the employee cost, ensuring that the cost is properly allocated to the various jobs. So here we also talk about various kinds of idle cost. How will you treat the idle cost, etc.? How will you treat the overtime cost, so on. So this will ensure the allocation of cost to the various jobs. So these are the five departments which together ensure that the employees' cost should be, they work together to ensure to keep the employees' cost to the most effective way. Now, when we will talk about the employee cost, we'll talk about some important aspects of it. What is normal employee cost and what is abnormal? So this we have discussed in the even in the material costing chapter that any normal cost is to be absorbed as part of the direct employee cost here. And any abnormal cost will go to the costing P&L account. So in employees cost, what is a normal cost or a normal loss? How does it happen? So first here is because of the idle time. What is idle time? When the worker is paid but he has not generated work during that period. So he has not done any work, but yet the payment has been made to him during that period. So idle time can be either normal or abnormal. Why will we say that the idle time is normal? So for example, a worker enters into the factory gate. It takes some time for him to move to his respective position. You cannot avoid this idle time because in this time the worker is not working on any job, yet he will be paid for this period. Similarly, if he moves from one job to another, We'll just discuss a little theoretical aspect so that you know how to treat these costs while doing your practical questions. So when you move from one job to another, also there would be a wastage of time, but it cannot be avoided. Then there are small breaks which cannot be avoided. So all this is a normal idle time. Why would it be a abnormal idle time? Let's say the raw material is out of stock. So you can relate to the chapter on material where we said that why should we have the safety stock? Because it's not just the loss in material that you will suffer. You'll also suffer because you will have to pay to the workers, employees, though they will not be working because it's not their fault that there's no raw material. There is power failure. So you cannot do anything, and the workers are sitting idle and they are still paid. There is machinery breakdown. Okay. So all these are your reasons of abnormal idle time. This should not happen. And another way of classifying this is also controllable and non-controllable. So if there is a normal idle time, this is non-controllable. Moving from one job to another, this is non-controllable. But taking small breaks, that is not controllable. But abnormal can be controllable also, and it can be uncontrollable also. So if the raw material is out of stock, it is controllable. We can ensure that the raw material should remain in stock. Power failure, it is controllable in the sense you provide appropriate power backup. Machinery breakdown, if it happens all of a sudden, despite your complete maintenance, then it is uncontrollable. But because if it happens because maintenance was not proper, then it is definitely controllable, right? So I hope you are understanding so far whatever I'm speaking, right? Everyone, I'm sure you're understanding. So when you understand these concepts, you will be able to do your practical questions better, right? So this is how the idle time is divided, controllable and non-controllable. All right, thank you for responding. What do you treat the idle time which is normal? You have to ensure that the this cost is absorbed by the productive hours only. Whereas if it is an abnormal idle time, it should go to the costing P&L account. As an example, let's say a very simple example, if a worker is paid at the rate of 100 rupee per hour and he works for 10 hours. His time is 10 hours. 2 hours are idle due to normal reasons. So if we see what is his hourly rate, it is 100 rupee per hour. So if we calculate the total wages, it will be 10 hours into 100. So the worker will pay rupees 1000 for 10 hours and his wages are 100 rupee per hour. But effective wage rate would for the company would be, what would be the effective wage rate? This 1000 is technically paid for 8 hours. 10 hours minus 2 normal idle hours. So the effective cost would be 1000 divided by 8. So it would not be 100 rupee per hour, it would be 125 rupee per hour, right? So this is the impact of idle hours. Now, supposing he remains idle for another 1 hour because there was no raw material. The raw material was missing. Then 1 into 125 rupees. This 125 would go to abnormal loss as costing P&L account. So this will go as abnormal loss in the costing P&L account, right? So this is how we treat the idle normal or abnormal loss, whether it is idle time or overtime, so on. Another very important aspect is overtime. What is overtime? So if a worker is working for 8 hours and because of some urgent necessity or because he was not productive throughout the day and he worked for 10 hours, so 2 hours would be overtime. So whatever the extra time he works over and above his normal hours, that is overtime. So generally, workers are paid extra for overtime. This extra payment is called as overtime premium. Okay, overtime premium. How will you treat the overtime premium? Firstly, we have to see why was there a need to get the overtime done from the workers. Sometimes it could be on demand of customer. So whatever you are manufacturing, you are doing your usual volume of work, but some customer comes on an urgent basis that they want extra units. So when customers demand urgently on a priority basis or urgently that they want some goods, in that case, the overtime premium can be charged as a direct cost and customer will bear this cost. So in that case, overtime premium is not treated as a cost which is going to as an overhead or abnormal. So this will be the direct, just like direct wages. Here, the extra payment, overtime premium, that will also be a part of the cost of wages. Second, it can happen because of due to some abnormal situations also. Like there was strike for some time, or there are floods because of which the production remains stopped for some time. So now to catch up with that, to overcome those periods when there was no productivity, we are doing overtime. So if overtime is due to abnormal reasons, the overtime premium is charged or due to machinery breakdown, due to raw materials not available, due to power short supply breakup. So this overtime premium will go again to costing P&L account as a abnormal cost. Sometimes a small amount of overtime is part of routine, neither on demand of customer, neither because of abnormal reasons. In this case, the overtime premium should be charged as overheads. You will come across the chapter on overheads, so you will understand what is the concept of overheads better. But here it will be charged as production overheads. So how do you treat the overtime? That depends upon why the overtime was required. If it is because the customer wants it, then you can charge it as direct labor cost. If it is because there was some abnormal part, some abnormal reasons, you will charge it to costing P&L account. But if it is a routine thing, small amount of overtime, like generally 8 hours is the what the customer workers are working, and you are generally having an overtime of 9 hours, or maybe because one particular department there was a shortage. So whosoever caused the reason, that overhead would also be charged to that department. So this is the treatment of overtime. A part of means, so let's say, how do we calculate the overtime premium? So as per Factories Act 1948, there is a law for the workers which says that if a worker works for beyond 9 days any day, beyond 9 hours in a day, or more than 48 hours in a week, this will be treated as overtime and will be paid at double rate. Okay? And we have to calculate it in the form of whichever is more beneficial to the worker. So whichever is more beneficial to the worker means, let's say the worker has worked for 9 hours on 6 days. So 9 hours into 6 is 54. So if you look per day, the worker has not worked any overtime. But if you look at the total hours he had input in the week, it should be not more than 48, but he has worked for 54 hours. So it becomes 6 hours of overtime. And so if the normal rate of wages is 100 rupees, like we discussed in previous example, for example, he will be paid at 200 rupees per hour on this extra 6 hours. Okay. So this is as per the Factories Act. So generally in the question it will be given. Okay, Satish Kumar, there is no extra WhatsApp link as of now. You can see the notes which are uploaded in the portal of the Board of Studies. So a part of means, so if you have paid 100 rupee per hour, you will pay overtime at the rate of 200 rupee per hour. But the premium is only the 100 rupees. Okay. The premium part, the over and above the normal rate, that is considered as overtime premium. And if the question specifically says that the overtime is paid at 150% of the normal rate, then we will not say 200, will not apply the Factories Act, and we will charge the overtime premium at 50 rupee per hour. So the worker will paid not 100 rupee per hour, but 150 rupee per hour. Out of this, let's take another example. Let's say the rupee 80 per hour is the normal rate. So if worker is paid at the rate of 150%, so he will be paid rupees 80 plus 40, 120 per hour for the during the overtime. Now out of this 120, 80 will still go as direct wages and 40 will go as overtime premium. Now this overtime premium will further go as direct wages. If it is on the request of the customer, it will be charged to the customer. If it is because of some abnormal reasons, this 40 will go to the costing P&L account as abnormal loss. And if it is a normal overtime, but not at the request of customer, then this 40 rupees will be treated as production overheads. Okay. So this was overtime. What is overtime? When you ask the worker to do extra time in the factory, to spend more time on the manufacturing job. So whatever the extra time he spends is treated as overtime, and you pay extra for this overtime. So the extra you pay, that is called overtime premium. And how it is to be treated depends upon whether it is on the request of the customer. So it will be charged to the customer and will be part of direct wages. If it is abnormal, it will be charged to costing P&L account. And if it is a routine, it will be charged to the production overhead. And as per Factories Act, if a worker spends more than 9 hours in a day or more than 48 hours in a week, this is treated as overtime. And overtime, as per Factories Act, should be paid at the double rate. So we have talked about idle time. We have talked about overtime. Third, I'll talk about some statutory deductions. Must have heard of Provident Fund. So Provident Fund is something, a saving for the workers. Navneet, the overtime premium is paid only for the extra hours input. So if a worker is supposed to spend 9 hours in a day, if he spends for 10 hours, so for 9 hours he'll be paid at the normal rate, and for the 10th hour he will be paid double. So if the wage rate is 100 rupee per hour, he'll get 9 into 100, 900 plus 200 rupees for the 10th hour. So we have Provident Fund, which is a fund which is created for the retirement of the employee. So we want that the employee should have something when he retires at the end of his uh, job tenure. When he does his job for the last year, let's say when he retires at 50, when he retires at 60, 65, 58, whatever the age he retires. So he should save some part during his services. So whatever the part he saves is kept in a provident fund. Here, the employer may make a contribution to the provident fund. But The employee may also make a similar contribution or less or more. So the employer and employee both will make a contribution to the provident fund. This is statutorily also required as per the law when you have a number of employees exceeding a certain limit. Similarly, there is ESI, which is Employee State Insurance. So the workers may not suffer some untimely death or accident, or maybe during the work period, they may uh, there may be an accident or something. So the insurance is taken for the workers, maybe as a group, maybe individual. So for this also, some part can be deducted. Then there can be some voluntary contributions also. Maybe the worker wants to contribute beyond a statutory limit towards provident funds or any other fund to save for his retirement. Now, what happens is there are three things here. Let's say one, what is the employer's cost towards the worker? And third, what will be the employee's earning? Second would be what is the employee's earnings? And third, we can say what will the cash taken by the employee at his home, what will be the takeaway money that he will get from his work. So when you look at the employer's cost, let's say employer is paying 100 rupee per hour, plus he's making a provident fund contribution of 8 rupees, and he's also making a employee state insurance payment of 2 rupees from his own pocket. So for the employer, it is costing 110 rupee per hour. But what will the employee take away from his money? So from 100 plus 8 plus 2, it becomes 110. But if the employee is also making a matching contribution, then this 8 or 2 will not go to the employee. This 10 employer's contribution will be deducted, as well as employee's own contribution will also be deducted from the payment. So it is the job of the department to ensure that proper deductions are made from the payment wages, and these are deposited in the respective funds before the due dates for making these payments. So over and all, at the end of the day, the earnings of the employee that he will get from the employer is 90. 20 will be deposited on his behalf towards a fund, or maybe it will go to ESI. So this is, you have to see very carefully whether the question is asking what is the employer's cost or what is the employee's earning. So if the employer's cost is being asked, you have to add the contributions made by the employer. But when the earnings of the employee or the cash that employee will take away home, you have to ensure that some of it is voluntary, some of it is under statutory requirement. You can, if the statutory requirement is, let's say, 8% or 10%, you may want to contribute 15%, and the excess part could be 5% would be your voluntary contribution. Despite that, there could be some other funds where it is not necessary to make a statutory contribution. You can make a contribution at your own will, the benevolent funds, and so on. So this makes us understand. Okay, you have a salary. There is a request to explain again the deductions. So on this salary, the employer may make a contribution from his own pocket. So that is the employer's contribution. and the employee will also make a matching contribution or maybe less or more. So these contributions to the funds, these are not paid to the employee when he gets his salary. These are deducted and deposited in the fund. So if the normal salary is 100, employer is making a contribution of 8 towards provident fund and 2 towards employee state insurance fund. So a total of contribution to funds become 10. Therefore, the employer's cost on this employee is not just 100, it is 110 rupee per hour. However, what employee will take away as his salary, what he will get in cash is not 100, not 110, but his own contribution will also be deducted. So here, the employer is making a contribution of 10 and the employee is also making a contribution of 10. So whatever the employer is giving him, out of that 20 will be deducted and deposited to the fund, right? 10 from employer's contribution and 10 of the employee's contribution. So from 110, when you deduct 20, what do you get in hand? 90. Is it clear now? So I have clubbed the ESI and the Provident Fund. That's its 10-10. Okay. So these are the deductions which are also required to be made. Right? So I'll quickly summarize the theoretical aspect of the employee cost, that there are 5 departments involved, which ensures that right workers is employed. He's doing the work in the right manner as per the standard times, in the right way. Job description, job specification is done as a part of job analysis, that what are the qualities or the uh, profile of the employee to do a particular job and what is he supposed to do in that job. Job evaluation is to analyze the job and give a rank to this, that this is a little higher rated job, this is the lower rated job. How does it help? A person who's, there are 2 workers. So a worker who's on a job number 1 in evaluation or a higher evaluation, and a worker is on a lower evaluated job. So there will not be any rift. He will understand that obviously the worker who's on a higher evaluated job will be getting more salary or more rate per hour. So this ensures that there is no rift or there is no demotivation amongst employees, that why is he being paid higher or lower. The employer's contribution is deducted from the employee's C2C or the cash that he takes away home, because it has, the deductions are supposed to move to the proper funds. All right, so personnel department will ensure right person being appointed and trained to do the job. Engineering and work study will do all the research kind of a thing, the standard time to do a job, the standard way to do a job, and what is the rank of the job. They can also classify, do a research on what is the merit rating of the workers. Timekeeping, time booking department's job is to ensure to see whether the worker is coming in the factory, what time is he leaving, and when he is in the factory floor, what is the time he is spending on various jobs. So for that, job cards or workers records are kept. He's asked to fill up all the details on what job is he working for how many hours and so on. The payroll department ensures that the right wages are being calculated and paid, deductions are made and deposited in the funds, and cost accounting department will ensure how to allocate the cost to the various jobs, to the various products, whether we need to take it to the abnormal costing P&L account, or whether we need to treat it as overheads or we need to treat it as direct cost. So Idle time is one very important cost that is associated with each worker because workers are paid though they are not working. Again, it can be normal or abnormal. So this is the example. Because we pay for the idle time, the effective hourly rate is more than what is we paying normally. But if it is abnormally paid, then it goes to costing P&L account. Then some deductions are made from the employee's salary or wages for which these are deducted, which becomes a part of the employer's cost if employer is making contributions towards those funds. However, the employee does not get to receive that. Rather, from the very 100, his own contributions will also be deducted. Then we talked about overtime, how overtime premiums are also done. Now, when we'll talk about uh, employee cost, one very important aspect will also be how to pay the workers. On what basis? Not employer's cost, it's the employer's contribution. Okay. Employer's contribution becomes the employer's cost. So if I am paying 100 rupee to my worker, plus I am also contributing towards the fund for his support when he retires. So if I'm paying 100 as his wages and another 50 I am contributing somewhere towards his provident fund or any other fund, then from my pocket I am going to spend 150 on this employee. So that means my cost is 150, so the worker will receive 100 if he doesn't make any contribution. So how to pay the workers? One of the important ways is you can pay him at the time rate. How you pay the worker? Time rate. Time rate means you fix 100 rupee per hour. So whatever the time he spends, so if he spends 8 hours on a day, he ends up taking 800 rupees. Another method is piece rate. Piece rate means you pay rupees 10 per piece manufactured by him. And let's say in a day he manufactures 60 pieces. So he is paid 60 into 10, 600 rupees. Both the methods have their own pros and cons. If you pay the time rate, an efficient and inefficient worker both are paid at the same rate. If you pay at the piece rate, a worker who is not able to produce right kind number of pieces in a particular day, let's say, maybe he is not well or something. So on a particular day, if he's not well and he could manufacture only 20 pieces, his wages drop significantly to 200. So maybe when it's time he needs more money to buy medicine and to have good food, to take care of his health, he is rather being paid less. He is not able to take care, and this creates a cycle. So he will lose his productivity. So there are some incentive schemes which we will talk about, which tries to balance between time rate and piece rate. So indirectly, they give an incentive for more efficient workers in some way. This incentive schemes can be based on time rate, they can be based on piece rate also. So this is the ways in which we will calculate how the workers should be paid. Further, we will also talk about a concept of labor turnover. So labor turnover is not something good. It means that the workers are leaving the organization quickly, and you have to find new workers again and again. You must have seen BPO industry, particularly when there are continuous night shifts. The workers get exhausted and they leave. They do a job like young uh, students after 12th, after in their graduation. They used to pick up the jobs of uh, business process outsourcing and did night shifts and hectic jobs. So they got exhausted. They would always leave the job after every 6 months or so. So when a workers continuously leaves the entity very soon, that means the labor turnover is high. But when you have a stable workforce which does not leave the organization and they are well trained, that means they are remaining in the organization for long. So labor turnover is not something which is good for the organization. Why? Because you have to recruit new workers again and again. So there is cost involved in recruitment. Old workers leave the job, so you have to pay them some settlement amount and compensations. And when new workers join, you have to train them. So training costs are also involved. Plus, they are not very productive during the training period. They may make errors in the beginning and they may cause damage. So these are some of the reasons labor turnover is not good. And how we measure them, we have three methods by which we measure the labor turnover. One is called separation method, one is called replacement method, and the third is called the flux method. So we'll calculate the labor turnover using these three methods. And my last point that I'll explain here as theoretically is how to calculate the efficiency and productivity of a worker. So two things are associated. One is output and one is time taken or hours required to do a job. Now, efficiency is directly related to output. The more the output, the more the efficient worker would be. So when you talk about output, efficiency is calculated actual output divided by standard output. So the engineering and time study department, they have given us that during this period, the standard output should be, let's say, 60 units. But if you are manufacturing 90 units, you are efficient, you are 150% efficient. For example, standard output was 60. You are expected to manufacture 60 units during this period, but actually you manufactured 90 units. So efficiency is 90 on 60, 150. However, efficiency is inversely related to time. The less time you take, the more efficient you are. So if standard time to do a job is higher and you end up taking less time, so technically maybe you should have taken 15 hours to do the job, but you have done it in only 10 hours, then also we say that you are 150% more productive or efficient. So productivity and efficiency. is calculated when you calculate the labor turnover, or when you check the efficiency of the labor. So efficiency can be checked through output or time. It's as efficiency is directly related to output, then you have actual output in the numerator. But as because it is inversely related to the time taken, then you have actual time in the denominator. So either you compare actual output by standard output, or you calculate the standard time or actual time to find out the labor efficiency or productivity. Okay. So let's start taking up the questions based on this. I'll start with the turnover because that is what I theoretically explained you last. Okay. So the rate of change of labor force in a company during the year ending 31st March 2013 is calculated as 13%, 8%, and 5% under the flux method, replacement method, and separation method. You have to find out average number of workers on roll, number of workers replaced during the year, number of new recruitments made, and number of workers at the beginning of the year. One more information that is given to you is the number of workers separated during the year is 40. Before proceeding with the solution to this, let us look at how labor turnover is calculated. The labor turnover under separation method is given by number of workers, FLUX, flux. It is flux. Flux means the change. So labor turnover under separation method is calculated by number of workers leaving or separated, left or separated, number of workers who have left the organization or who have been separated from the organization during a period, divided by average number of workers during that period. Into 100. So this period is important. It could be a month. So you check what is the number of workers on the first of the month and on the 30th of the month. So first plus 30th, you will be able to calculate the average, 1 plus 30. On the first, there were, let's say, 1,000 workers. And on 30th, on the last day of the month, let's say there are 1,200 workers. So you will say that during this 1 month, on an average, there were 1,000 plus 1,200 divided by 2, 1,100 workers. Okay. This could also be, so you will see how many workers left or were separated from the entity during this 1 month. You can also calculate for a quarter. So how many workers were there, let's say on 1st April, and how many workers were there on 30th June. So this makes up a quarter. When you calculate for quarter, it's not necessarily 1st April and 30th June. It may also be possible 1st January, 31st March, anything. Okay. So for a 3 months period or 1 quarter of a year. So you'll take the opening number of workers on this period and closing, and you'll divide by 2 to get the average number of workers during this quarter. And then you will find out how many workers separated in this complete quarter, how many left the organization or separated. So this is the first method by which you calculate the labor turnover. And if you look at this question, 13%, 8%, and 5%. So there are three methods: separation, replacement, and flux. So separation method, flux, replacement, and separation respectively. So under flux, the answer is 13%. Under replacement, it is 8%. And for separation, it is 5%. So this is given as 5%. And it is also said how many workers separated during the year? 40. So if you look at the formula, number of workers separated during the year, 40. Average number of workers is not known, but this percentage is 5%. So through this, you can calculate what is the average number of workers. So what would be the average number of workers? 40 divided by X, let's say, or so when you will solve this equation, you will get X is equal to, or the number of workers who have left the organization are 800. Okay. So average number of workers on roll during the period were 800. And this is the rate of change in labor force for a company during the year. So this period is complete 1 year. So in this 1 year, ending 31st March. So we have some number of workers on 1st April 2012 and some number of workers on 31st March 2013. But during this period, the average was 800. 5% of 800 will give you 40. How many numbers of workers replaced during the year? So you have understood how we calculate the number of labor turnover using separation method. The formula is number of workers who have left or been separated from the entity divided by average number of workers into 100. So 40 divided by, let's say, X number of average workers into 100 is 5%. When you will solve it, you will find out that this is 800. Replacement method. Number of workers replaced due to separation. So we have seen that 40 workers separated. So because of those workers who separated, you must have recruited further new workers. So these must have been replaced. Those who left must have been replaced by some new workers in this period. So that is the replacement method. Now see, we have here 40 workers leaving in the example, which is 5% of the total workforce, average workforce. So if 40 is 5%, 40 divided by 5%, 800 workers are average. Now we have some vacancies. This will be filled and new workers will come in replacement of this. So it is not necessary that out of these 40 workers who've been replaced and we will recruit exactly 40 workers. The new workers can be 80. The new workers can be 30. It is possible that they were highly skilled And now we are not getting the skilled workers. So we need maybe double the number of workers. We are getting semi-skilled, so we need them double. Or maybe now we are out of these 40 workers, now we are replacing them with 30 more efficient and skilled workers. So it is not necessary that when 40 workers will leave the organization, exactly 40 will replace. They can be more, they can be less. So in the previous example, if you look at this, now that we have found out 800 workers is an average, he's asking how many workers replaced during the year. So 8% workers have replaced. Now, formula is number of workers replaced. This time we don't know, that is being asked. But we have found out that the average number of workers are 800. And this figure is 8%. Okay. So how many numbers replaced, we don't know. But because of the previous question part, we knew that there are 40 workers who separated. From that, we calculated average number of workers in this period, in this year. So average was 800 and 8% are replaced. So that means how many workers are replaced? 64. 8% of 800. Hmm. So 64 workers have been replaced. Number of new accessions and number of workers at the beginning of the year. What do we mean by new accessions here? So it is possible that an organization has 1,000 workers, okay? And let's say 40 workers left the organization. So you have 1,000 minus 40, 960. Then you recruited some new workers. So you recruited 64 workers in place of those who have left. So out of these 40, those who have left, we have 64 workers replacing in their position. But it is also possible that the organization or the entity has gone for an expansion. So they recruited another 100 workers due to expansion. Okay. So these 100 workers due to expansion will not be counted as replaced. They are recruited, but they are not replaced. They are because of expansion. So those workers who are being recruited because of expansion or for other reasons, apart from those who separated, they do not count as replaced. They count as new accession. So we have to find out here how many workers were there because of new expansion. Now, if you look at the flux, the formula for flux method is separated plus replaced and plus new accession, any new worker who has come in, divide by average number of workers into 100. Okay. As separation is 5%, replacement is 8%, and 5 plus 8% is 13%, and that is what the flux rate is. Rate of turnover due to flux is 13%. So it is somewhere indicative that there is no new accession. Why? Because you will have 40 workers left plus 64 replaced. This divided by average number of workers would remain same. So this is the answer for flux. This is 104 on 800, which is 13%, right? If there would have been new accession, so if I would have added something else, this would have gone beyond 13%. Only then it would have been possible that there is a new accession. So how many new recruitment? It's 0. Replaced 64, average number of workers 800, right? So 40 separated, 64 replaced, 0 new accession. So 40 plus 64 plus 0 will give you 13%. So very clearly, when you see that the separation plus replacement is equal to flux, 8 plus 5% is equal to 13%. If flux would have been 14, 15%, then there would have been new accession. And finally, you are being asked how many number of workers were there at the beginning of a year. So let us say X number of workers were there in the beginning. Okay, great. So let us say X number of workers were there in the beginning of year. So out of these X number of workers, 40 have left, plus 64 have been replaced. So this becomes your closing number of workers, right? So this is how much? X plus 24, X minus 40 plus 64, X plus 24. So if your opening number of workers were X and the closing number of workers are X plus 24 and your average is 800, so you can find out the value of X, X plus 24, opening plus closing divided by 2 is giving you 800. 2X plus 24 is equivalent to 1600. 2X will be equal to 1600 minus 24. 2X is equal to 1576, and this implies X is equal to 812. Sorry, 2X plus 24. Yeah. So he's asking number of workers at the beginning of the year. 788, right? So there would be 788 workers. Lohit wants to say something. Okay. Yeah. So 788 is the correct answer, Lohit and Minu. Both of you are correct. Good. So what is the average number of workers in the beginning? What is the number of workers in the beginning? 788. And what is the number of workers in the end? 812. So when you'll take the average of 788 plus 812, you will get the average number of workers as 800. Okay. So I'll repeat here. Labor turnover means the labor movement, leaving and joining organization. It is not something good for the organization because then you have to train, recruit, and they also have manufacture less productive and they manufacture defective items initially. Turnover can be calculated from separation method, replacement method, and flux method. Separation is number of workers leaving when they left, maybe because they were terminated, maybe because they were, so they can leave for various reasons. You can terminate them, they can resign, they can retire on their own, they can, maybe there is untimely demise or there's timely demise. So for whatever the reason, the workers may have left. Number of workers left Uh, because the answer is in percentage, you have to give it percentage. If you write the percent, okay. If you write it in percentage, it will give you a different answer. So don't write the percentage. Straight away say, because I am multiplying here by 100, so automatically it is 5. 40, if you will see that because I have multiplied here by 100, so it will give you equal to 5. So you don't write the percentage, that's okay. 4,000 by 5 will give you 800. The percentages, the final answer will come as a percentage. So when I'm multiplying this by 100, you can write straight away equal to 8. Don't write 8%, you can write 8. Makes sense, Lohit. Okay. So I was giving you a crux. Separation means number of workers left. Divide by every number of workers into 100. So you'll get a number here, not and which number will be expressed as final answer as percentage. So if it comes out 5, the final answer is 5%. Second is replacement method. Number of workers replaced due to those leaving. Divide by average. Into 100 will give you a number in a percentage. Flux is separated plus replaced plus new accretions. How many new workers have joined for various reasons? Divide by average number of workers. Into 100. So in this question, this was 5%. This was 8%. And this is 13%. Obviously, when you will do the calculation, you will only write 5, 8, and 13. If you will write percentage, you will end up getting different answers. That's wrong. Because we have multiplied by 100, so it is equal to 5, but the final answer is 5%. When you see separation plus replacement as exactly equal to flux, 5 plus 8 is equal to 13. That means there is no new accretions. This is 0, right? So labor turnover is not something very good. It should not happen in an organization. Number of persons replaced due to separation divided by average number of person in that period, not average number of replacement. Flux is separation plus replacement plus new accession divided by average number of workers. Yes, right. Average number of workers in that period. Denominator is same in all the three formulas. Average number of workers in that period. Okay. Any doubt further or is it clear? The rate of change of labor force is given on 31st March 2013 year end. So we are taking the period as complete year and the labor turnover was calculated as 13, 8 and 5% under flux, replacement and separation. So they have given the answer for the 3% and one figure they have given that the number of workers separated during the year is 40. So 40 divided by average into 100 is giving 5%, which means that the total number of workers average was 800 because 5% of 800 is 40. How many replaced? 8% of it, 800 replaced. That is 64. Flux is 13%. So when you have 40 plus 64, that alone gives you 13%, which means there were no new accretions or accessions. No new workers have joined because of expansion or any other reason. So all these 64% who are workers who have joined or have been replaced because this 40 has have left. Now, number of workers at the beginning of the year. So we don't know what is in the end of the year or in the beginning of the year, but we do know that average is 800. So what is the method for calculation of average? Opening plus closing divide by 2. Now, if opening plus closing divide by 2 is, okay, that is what I'm explaining, Satish Kumar. New accretion minus total number of workers plus recruited plus placed. Yeah, if flux is more than separation plus replacement, that will be an indicative that there have been new accessions. How did we calculate the average number of workers during the beginning of the year? So let's say this is the beginning, this is the end. In this entire period, we know that the average is 800. We don't know what this figure is, so let's take it as X. But we do know that out of X, 40 left and 64 new joined. They were replaced because of this 40. New accretions were the 0. So the closing balance will be X plus 24. So opening balance was X number of workers, and in closing, there were 24 more workers than in the beginning. So total average will be 800. X plus 24. 2x plus 24 is divided by 2 is 800. Therefore, 2x plus 24 is 1600. 2x is 1576 and x is 788. Or we can very quickly also calculate like this. 40 joined, 40 left, 64 joined. So there is an increase of 24. So when there is an increase of 24 from the average is either 12 less half of the new accretions, 24 divided by 2. So average is 12 less than closing or 12 more than the opening. So the opening balance will be 12 less than 800. 788. Okay. Is it clear, team? Is it clear now? Separation is 5%, replacement is 8%, and flux is 13%. So, and 40 workers have left. So 40 divided by x into 100 is 5. X is 800. Replacement is 8%. 8% of 800, 64 workers replaced. As flux 13 is equal to 8 plus 5, new accessions or new recruitment 0. Number of workers in the beginning of the year, that is to be found. So average is 800 and 40 left, 64 joined. So x minus 40 plus 64 will be closing, which is x plus 24. So the average of x and x plus 24 is 800. You can calculate the value of x. Uh, if we divide 24 by 2, that is 12. And the average is 800. So if you had this figure is 788. This figure is 812. So as there was a movement of 24, if you have the average, you can add 12 to this or deduct 12 from this. So the average is 20, and there is a change of 12. The flux is here, the change is 12. 12 has, from the average, you have 12 less, and from the average, you have 12 more in the closing. Okay. The difference of 24 will be created only when one figure is 12 less and one figure is 12 more than the average. And because there is an increase, so you have 812 as closing and 788 as opening. If the closing was X minus 24, that means opening is more. In that case, 12 more in the opening and 12 less in the closing. Now we do one very interesting question on the basis of this labor turnover only. The management of Sunshine Limited wants to have an idea of the profit or loss which is foregone as a result of labor turnover. Last year sales was 66 lakhs and PV ratio was 20%. PV ratio is profit volume ratio, which also comes from contribution percentage. So maybe you've not done the marginal costing chapter as of now, but just see that if you have a selling price of 10 rupees and variable cost of 8 rupees, then your contribution is called as 2 rupees. That means out of every 10, 8 rupee will always go as an expense and what will be left is 2 rupees, which will contribute to recover your fixed costs. And if after recovering fixed cost anything is left, that will contribute to profit. Okay. So the contribution percentage or the PV ratio is 20%, which means out of 66 lakh, 20% is what you are left with to recover the fixed cost and balance profit. So if I have sold even 1 rupee less, that means 20 paisa of my profit is eroded. 20% of 1 rupee. If the sales is 10 rupee less, that means I am losing a profit of 2 rupees. It directly impacts the profit or loss. So even if I'm not able to recover my fixed cost fully, I am in losses. Still, uh, even with every 1 rupee sale, my loss will increase by 0.20 or my profit will decrease by 20 paisa. So PV ratio or contribution percentage is 20%. Okay. Now what has happened is you have achieved a sales of 66 lakhs and the contribution percentage or PV ratio is 20%. So every 1 rupee sale, you are able to generate 0.20. Now, how many hours of the workers have worked during this period is 3.45 lakh hours. The actual number of hours the workers worked by direct force was 3.45 lakh. So our important information is sales rupees 66 lakhs, PV ratio 20%, actual hours worked by the labor force 3.45 lakh hours. As a result of the delays by the personnel department in filling the vacancies due to labor turnover, 75,000 potentially productive hours were lost. Hours lost, 75,000. And the actual direct labor hours also included 30,000 labor hours attributable to training new recruits, out of which 50% of the hours were unproductive. So out of this 3.45 lakhs hours, 3.15 lakh hours was normal. Trained workers were doing this job, but 30,000 hours were done by trainees or those workers who were in on training. And the trainees were only 50% productive. So that means this 30,000 is equivalent to 15,000 hours only. Okay, I'll repeat. The total number of actual hours worked during this period was 3.45 lakh. But because the personnel department was delaying in filling vacancies due to labor turnover, 75,000 potentially productive hours were lost, and the actual direct labor hours included 30,000 hours attributable to training new recruits, out of which 50% of them were unproductive. So when you are training, the workers were not 100% productive, they were only 50% productive. So this 30,000 hours produced an output of 15,000 hours. Okay. So total productive hours then become, these are 100% productive, 3 lakh 15,000 plus 15,000. So your total productive hours are 3 lakh 30,000. The cost incurred consequent on labor turnover revealed on analysis the following. One, you had to pay a settlement cost of 27,420 for those workers who were leaving. There was a recruitment cost of 18,725 to conduct interviews, to give advertisements across places that we need workers, then taking their interviews, taking their tests, selecting them, and once selected, giving them training. So these are four are additional costs. In this part of the question, this is simple because you will simply add it. Now, assuming that the potential production loss due to labor turnover could not have been sold at prevailing prices, you have to find out how much profit or ascertain the profit foregone and lost last year on account of labor turnover. So, what is your cost because of labor turnover? 27,420 is the settlement cost plus 18,725 is your recruitment cost plus 12,750 is the selection cost plus 16,105 is the training cost. Okay. 27,420 plus 18,725 plus 12,750 plus 16,105. So this turns out to be 75,000 in totality. This is your cost. Apart from this, what it is saying is that you have lost 75,000 hours. And this could have also been sold at the prevailing prices. So there is some opportunity cost as well because of the sales which we could not achieve during the hours lost. So first we'll calculate how much hours were lost. If this does not include the training hours, training time unproductive is not part of this. Let's assume that it is not part of this. So how much was the training time? 30,000. And out of that, how much was unproductive? 50%. So 50% of 30,000 hours was also lost, let's assume. So total time lost is 75 plus 15,000, 90,000. If it has been said this 75,000 includes the unproductive training time, then our final answer would be only 75,000 hours lost. Now, how much is the sales foregone? So total sales achieved is 66 lakhs. And total productive hours is 66 lakhs is the sales achieved in a total productive hour of 3 lakh 30,000. Prevailing price. I'll come on to that. 66 lakh of sales achieved in 3 lakh 30,000. Therefore, sale per hour. 66 lakh divided by 3 lakh 30,000. Okay. So it is 20 rupee per hour. At prevailing price, if we had sold this, we would have got 20 rupee into 20% PV ratio. Sales into PV ratio. So 20 rupee is the per unit selling price, prevailing selling price into 20%. So 4 rupee per hour is the profit foregone. And how much hours are foregone? 90,000 hours are foregone. And profit foregone is then 90,000 into 4, that is 3,60,000 rupees. What is the meaning of prevailing price? Like I said if you sell your product at 10 rupee and there is a variable cost of 8 rupees, then you get a PV ratio or contribution of 20%. Okay, 2 rupees is your contribution on a sale of 10 rupees into 100. So that's why you are getting a contribution or PV ratio is 20%. So if you have worked one more hour, you could have sold 20 rupee more, and 20% of 20 rupee, you could have generated a profit volume of 4 rupees. So in this 90,000 hours, you could have generated a profit of 3,60,000 rupees. Why at the prevailing price we are saying why it is important? Let's change the selling price to 12. Let's keep the variable cost at 8 rupees. Now the PV profit is 4 or contribution is 4 on 12. So your PV ratio has changed from 20% to 33.33%, right? So if the workers had worked for these hours also, and whatever they had produced could have been sold at the existing prevailing price, you could have generated additional sales of 75,000 into 20, that is 15 lakhs, and 20% of that would have been 3 lakhs. But here the productive hours is lost is 90,000. So 90,000 into 20. Okay, 18 lakhs would have been additional sales, and 20% of additional 18 lakhs would have got us 3,60,000 more profit. Uh, all right. He's saying that 75,000 potential productive hours were lost in filling vacancies. So there was nobody. 75,000 hours, productive hours were lost because there was no vacancy. There was nobody, the department had delayed in filling the vacancies. And additional 30,000 hours when their vacancies were filled, the workers were still under training. And when this 30,000 hours they were training, they were only half productive. So 15,000 hours were lost here also. So 75 plus 15, 90. Alternatively, you can assume that these 15,000 are included in this. In that case, you will have a different answer. 75,000 into 4, 3 lakh. Profit foregone due to delay in filling vacancies, plus additional 75,000. You will add them separately, okay? Recruitment cost, settlement cost, all this. So either your answer is 375 if you assume that this 15,000 is a part of this 75. So your answer would be total profit foregone or loss due to labor turnover is 3,75,000. Here, if you assume that 15,000 is apart from 75,000, then you get a different answer, which is 4,35,000. As the question is not mentioning clearly, you may assume anything, but you have to mention it. In this question, it appears to me that 75,000, nobody was there as there was no vacancy. It was delay in filling vacancies. Apart from that, training was also there for 30,000 hours, half productive. So 75,000 hours lost because there were no workers, and 15,000 hours lost because the workers were under training. So I assume that this 15,000 is not included in 75,000. Therefore, I would take 90,000 into 4. You may also make a footnote, make an assumption that we assume that the training time lost is also is already included in the productive time lost due to delay in filling vacancies. So then it is 75,000 into 4. In exam, if this question is not already mentioning this, then you have to make an assumption. Why you at 75,000? Okay. So I'll come on to this again. And then team, I'll give you a 10 minutes break. So see, there was profit foregone, which we calculated by hours lost multiplied by sales per hour multiplied by PV ratio at the prevailing price. So this is hours into sales is the sales foregone at prevailing price into 20% or PV ratio will give us the profit foregone. So let's say 75,000 or 90,000, whatever you want to take. 75,000 into sale per hour has been calculated at 20 rupee per hour. Every hour you are making a sale of 20 rupees and 20% is the PV ratio. So 3 lakh is the profit foregone. Alternative one, when you assume 15,000 is included in 75,000 hours lost. Otherwise, it is 90,000, 75 plus 15 into 20 into 20%. So either it is 3 lakh or it is 3,60,000. Then you had certain other expenses also, you see, settlement, recruitment, selection, training. Plus, so this is the profit foregone. This is the opportunity cost or loss. Plus, you had settlement costs. Plus, you had recruitment costs. Plus, you had training costs. And there was one more, selection costs. So you will write them all separately, whatever the figures they are. I did a total of it as 75,000. Okay. So 3 lakh plus 75,000, 375, or 360 plus 75, 435. Okay. The footnote will be, it is assumed that the unproductive training hours 30,000 into 50% are already included in the figure of 75,000 potential productive hours lost due to labor turnover or delay in filling vacancies. But if you want to include, write here labor turnover only. And if you want to exclude, you will say they are not included because 75,000 hours are lost due to delay in filling vacancies due to labor turnover and another 15,000 in unproductive training hours. Okay. Is this question clear? So here, if you are asked what is the profit lost, all this is definitely a loss. Apart from this, you have to calculate what is the sales per hour and multiply it by the potential hours lost. That is the total sales lost. And sales lost when multiplied by PV ratio gives the profit loss. So that is a opportunity loss. Okay. So team, you can take a 10 minutes break here and we'll resume after that. If you have if you have any questions, you may ask. 5,000 as the hours lost. And if you want to take this, you will say additionally 15,000. This note is valid only for this scenario. Yeah, she's requesting me to speak in Hindi, so I'll utilize this break time to give you this explanation in Hindi. So what is happening here is कि मैनेजमेंट ने 66 लाख का सेल किया है और उस 66 लाख की सेल पे 20% प्रॉफिट होता है. बट ये 66 लाख की सेल की कब है? 3,45,000 आवर्स के अंदर. बट क्या ये 3,45,000 आवर्स जो काम किया उसमें ये सेल अचीव की? नहीं. इस 3,45,000 आवर्स में 30,000 आवर्स ऐसे थे जब वर्कर्स ट्रेनिंग करते हुए काम कर रहे थे. तो उस टाइम वो सिर्फ आधा काम कर पा रहे थे, 50% प्रोडक्टिव थे. तो 3,45,000 के पहले मैंने दो बाइफर्केशन किया, दो पार्ट्स बना दिए. एक 3,15,000 घंटे जिसमें वो 100% वर्कर्स काम कर रहे थे, और 30,000 वो वाले आवर्स जब वो ट्रेनिंग के टाइम काम कर रहे थे. तो क्योंकि इस टाइम ये सिर्फ 50% काम कर पा रहे थे, तो ये 30,000 आवर्स जो है वो इक्विलेंट टू 15,000 घंटे के बराबर हुआ. तो 3,15,000 घंटे यहाँ काम किया और 15,000 ये. तो 3,30,000 टोटल आवर्स आपने ढंग से काम किया, पूरा काम किया, प्रोडक्टिव आवर्स. अब 3,30,000 घंटों में अगर आप 66 लाख की सेल जनरेट करते हैं, तो 66 लाख डिवाइड बाई 3,30,000, हर घंटे में आप 20 रुपए मतलब सेल कर सकते हैं. तो अगर हम ये 75,000 घंटे भी इसी प्राइस पे बेच पाते, तो हमारी सेल होती 75,000 इंटू 20. और 75,000 इंटू 20 मतलब 15 लाख की सेल होती और उस पे 20% प्रॉफिट. तो हमें 3 लाख का प्रॉफिट होता जो हमने खो दिया. इसके अलावा ये खर्चे एक्स्ट्रा करने पड़े. तो टोटल हमें 3,75,000 का नुकसान हुआ. और अगर आप ये मानना चाहते हैं कि ये जो 15,000 घंटे प्रोडक्टिव टाइम इस 75,000 में शामिल नहीं है, तो फिर तो 90,000 घंटे काम नहीं हुआ. और 90,000 में 20 रुपए के हिसाब से 20% के रेट से 3,60,000 का नुकसान. प्लस ये 75,000 तो अपनी जेब से पे करने ही पड़े. ओके, आई होप इट इज क्लियर नाउ. रेस्ट कैन टेक. Minu and others also. This entire question has two type of cost incurred because of labor turnover. One is opportunity cost, and second is out of pocket. You have to pay the settlement payment also. You have to incur the recruitment expenses also. You have to incur the training also. You have to incur the selection also. So don't confuse this 75 with the 75 hours potentially lost. Okay. Rather, I should uh, write it as it is by chance coming, the total is coming out to be exactly same. So all these costs are definitely there. Apart from this, what is happening is that 70, either 75 or 90,000 hours are lost. Okay, I'll take this fresh page and then I'll either 75,000 or 90,000. I'm not trying to confuse you by taking two alternatives, but it is just that you have to give a note here. In this, you have to say 15,000 training hours are included in 75,000 hours. Here you have to say 15,000 training hours are lost plus 75,000 hours lost due to filling in vacancies, delay in filling in vacancies. But both are the cause of labor turnover. So now if you lose 75,000 hours, you could have generated a sales of 20 rupee per hour on this. You could have generated a sales of 15 lakhs. And because the contribution percentage is 20%, you would have generated additional contribution of 3 lakh. So this 3 lakh is definitely lost. Here it would have been 90,000 into 20 is 18 lakh, and 18 lakhs into 20% is 3 lakh 60,000. So either you can take 3 lakh profit foregone plus 24,7,420 plus 18,725 plus 12,750 plus 16,105 is equal to 375 total loss due to labor turnover. Else 3 lakh 60,000 plus 27,420 plus 18,725 plus 12,750 plus 16,105, a total of 4 lakh 35,000 lost due to labor turnover. I hope it is clear now. Yes. So because I just did the total of all these four figures and wrote it down as a cumulative 75,000, this 75,000 and this 75,000 are not related at all. This 75,000 is hours lost. And this 75,000 is the extra cost on settlement, recruitment, training, and selection, which has been paid out of pocket. This is only a opportunity cost, which we could have generated. Right. So, okay, the break is also up. Let's discuss the next question. So we have completed one aspect. In your study material in ICAI, this is towards the last section, I think the 13th part of the book. which is labor turnover and questions on that. So I'm sure you will be able to complete that. There's also a case study uh, which is related to labor turnover. So when you come for the next class on labor, I would like you to go through the study material thoroughly and ensure that all the questions related to labor turnover, including the case study towards the end, you should be able to do. We will discuss the case study in the next class. It is okay. Now let's talk about how to calculate the hours, how to allocate the time or the cost incurred on workers across various jobs. So first, calculate the earnings of the workers A and B from the following for a month and allocate the earnings of each to job X, Y, and Z. So basically, there are two workers, worker A and worker B. The basic wages of workers are given, dearness allowance is given, provident fund, the statutory deductions which the employer and the employee make, that is given 8% for both, and ESI is also given 2%. Overtime is also done for 10 hours. So the normal working hours for the month are 200 hours. And if there is overtime, it is paid at the double the normal rate plus DA. So we don't take PF and ESI into consideration to calculate the overtime payment. We calculate only the basic and DA here as is specifically mentioned. The employer contribution to state insurance and provident fund are also at equal rate with the employee's contribution. So that means the employer is also contributing 8% and 2%, and the employee is also contributing exactly 8% and 2% of his salary towards ESI and PF. Workers are employed on three jobs. So A and B both are doing their job X, job Y, and job Z. So they are both spending their time on these two jobs only, as the total is 100%. So whatever the cost is being paid to A has to be allocated amongst job X, Y, and Z in the ratio of 4:3:3. 40 plus 30, 70 plus 30 is 100. So it has to be allocated in the ratio of 4:3:3. And whatever the cost has been incurred on worker B is to be allocated to job X, Y, and Z in the ratio of 5:2:3. Is this part clear? So we have two workers, A and B. They both are uh, doing a work in a factory or in an organization where they're both working on three jobs, X, Y, and Z. And how much time do they allocate on these jobs is also given. Besides what is being paid to them, that is being mentioned here, plus worker A has done 10 hours of overtime. And it is specifically said here that the overtime was done on job Y only. And overtime is paid at the double rate. So first we'll try to find out at what rate are we making the payment to worker A. And it is being asked what are the earnings of the worker. So earnings, statement showing the earnings of worker A and B. So we'll prepare a columnar form table where we'll write the particulars of the wages. So you have basic wages, you have dearness allowance, okay. So basic wages are 1,000, 10,000 and 50%, 16,000 and 50%. amount in rupees. Now we are trying to calculate what worker A and B will take away. So 10 and 5, but less employee state insurance at the rate of 2% and PF contribution at the rate of 8% of basic. Okay. So this is 200 and 800. This will be deducted. Why? Because the employee is making a matching contribution, employee's contribution equal rate. So employer's contribution to state insurance and provident fund are at equal rate with the employee's contribution. So their take home would be 14,000 for A, earnings of A that he can take away, and here 2% and 8%. So this will be deducted from the. So this is the money earnings of the worker A and B. Now to calculate the overtime rate, it is only, let's calculate it only for worker A. Basic 10,000. Dearness allowance 50%, 5,000. Total wages 15,000. For how many hours? 200. Therefore, hourly rate or rupee per hour, 15,000 divided by 200, 75 rupee per hour. Overtime rate is at the double rate. So overtime will be paid at the rate of 75 into 2, that is equal to 150 rupee per hour. Overtime hours worked, 10 hours. On job Y. So 10 into 150, 1,500 is the additional income of worker A, which will be charged to Y only. Now, when we are calculating the wages of worker A, overtime payment will also be made to him, 1,500. So this will be at 15,500. We will not deduct double the deductions as equal contribution is made by the employee as well. Why ESI and PF not included as cost of company. Okay. Firstly, we are calculating what worker A and B are getting. What is it that worker A and B are getting? So if you want to add, let's say 10,000, 5,000, 1,500 overtime, plus cost to the employer of ESI, cost to the employer of PF. This is the total cost to the employer. 16,500 and 17,500. Now, out of this 17,500, this 1,000 he will not receive. not paid to the worker, but deposited. And from this 17,500, additional 1,000 also will be not paid to the worker, but deposited. So final answer is again same. What employee will take away from earnings of the employee, worker A, would be 15,500. So even if I had added the ESI and PF here, I would have to deduct the double amount. See, I'm giving you 100, and I tell you that if you are ready to contribute 20 rupees to a fund, I will give you 20 more, and I'll also contribute 20 more from my side. So you say, okay, I am ready to contribute 20 to a fund. So indirectly, my cost is 120, but out of 100, if you are going to contribute towards a fund, you will receive only 80, right? So 20 yours and 20 mine, 40 will be deducted. So either I first add my contribution and then deduct the PF and ESI double, or I can take your earnings and just deduct the ESI and PF. We get the same answer. Either from 120, I can deduct 40, or from 100, I deduct your contribution of 80 and take your contribution and my contribution together. I deposit it in the funds. All right. So if the question was, what is it costing the employer? Then you would have added, which we will do it now. So we have calculated the overtime, and overtime is paid at 1500. And now we will calculate what is the cost to the employer. So I'm going to erase this one here. I hope you can note it down quickly. The normal rate is 75, so overtime is double. So 75 into 2, overtime rate is 150. Now let us see what is the cost of the various jobs to the employer. Now the ESI and PF will come as a role will be there, because actually the employer's cost is that also another 10%, right? So first we have calculated the earnings of worker A and B. What are they going to take home? Then you are asked to calculate, this is given, calculate the earnings of worker A and B from the following month and allocate them to job XYZ. So let's say what is the cost to employer. Basic, once again, 10,000 and 16,000. DA, I'll write it short here, 5,000 and 8,000. ESI, 8%, 800, and 1240. PF, 2%, 16,000 into 8%, 1280. Total cost to the employer, 16,000 and 24 and 1,600, 25,600. Apart from this, overtime, 1,500. Allocation to job X, Y, Z. Job X, Y, Z. Worker is allocation 16,000 in the ratio of 433. Overtime, cost, that is only on Y. Allocating worker B, wages 25,600 in the ratio of 5 to 3. Seven six eight zero. So this is how you allocate the cost to the three jobs. Okay. 4,800 plus 1,500 plus 5,120. You're asking me if reading the chapter is important. One, reading is very important. When you are theoretically strong, you will be able to manage your practicals also better. Employer contribution not to be included in the cost. Yes, employer contribution is the reason that I have included. Employees contribution is part of all this 10,000 and 5,000. Whatever the employee's contribution is, it will be deducted from here. Employer's contribution is added. I am giving you 100 as a basic, plus I am giving you 20 as additional PF contribution. So total my cost for you is 120. Out of this 120, 20 which I have given you extra plus 20, this 20 and 20 from here. 40 will go to the fund, and therefore you will end up getting only 80 in your hand. That's the concept. Employees' contribution is always part of within the basic and DA. From there, the deduction will be made. So when I'm calculating what he will take away home, then I have deducted from his share only. From this 15,000, I have deducted the 1,000. But when I'm paying, I'm not just paying 15 and 1,500. I'm also paying another 1,000. Okay. So while calculating the cost, this 800 and 200 are added over and above 15,000 plus the overtime of 1,500. Whereas while calculating what he's taking away, this 200 and 800 is deducted because he will not get it in his hand. This is included in 10,000 and 5,000. All right. So this is how we have calculated the wages of the worker, and we have allocated it to the different jobs as well. Next is your calculation of the earnings of a worker under Halsey and Rowan plan. Now, this is the next important concept, which is very important. This comes under the incentive schemes. So, Halsey and Rowan were two very important part of the incentive schemes. Both of them based the incentive on time rate basis. So what Halsey suggested is that each and every worker must be paid as per the time rate. Plus, he should get some incentive or bonus. And he suggested that bonus should be equal to 50% or half of the time that he saves multiplied by the hourly rate at which he is being paid. And how we will calculate the time saved? HR here stands for hourly rate. How do we calculate the time saved? The standard time for a job must have been provided by engineering and timekeeping and uh, time and motion studies. And actual time taken by him to do the work, actual hours or actual time, that would also be given. So time saved would be standard hours minus actual hours. You can say standard hours minus actual hours, or you can say standard time minus actual time. Okay. So this is the time saved into hourly rate, or you can also simply call it R. So this is the benefit to the organization, because if a 10 hours work was done in 8 hours, 2 hours are saved. So if his hourly rate is, let's say, 100 rupee per hour, so this saves management 200 rupees. So what was suggested or advised by Halsey was that 50% of this should go to the worker. Standard hours minus actual hours into hourly rate. Rowan also suggested on the same lines. However, he departed and he suggested that the bonus should be calculated in proportion to the time saved divided by standard hours. And whatever the actual hours he have earned, the bonus rate should be applicable on that. So what Halsey is suggesting, just pay 50% of whatever is savings, whatever time saved into hourly rate. But Rowan suggested that let's give it a percentage, which will vary depending upon what percentage of the time is saved as proportion to standard time. And then we multiply it by actual hours into hourly rate. So whatever his actual wages comes out to be as per time rate, on that we will apply this percentage or this proportion as bonus. So calculate the earnings of the worker under Halsey plan and Rowan plan from the following particulars. The hourly rate of wages guaranteed is only 50 paisa per hour. So the hourly rate or rate is given as 0.50 per hour. And the standard time for producing 1 dozen article. So standard hours are 3 hours for 1 dozen articles. Actual time taken by the worker to produce 20 dozen articles. Actual hours are 48 hours. So the standard hours are not given for 20 dozen. Standard hours are given for only 1 dozen. Then standard hours for this job, that is to manufacture 20 dozen articles. Okay. So if 1 dozen is made in 3 hours, 20 dozen would be made in 60 hours, right? It is a direct proportion. The more time you take, the more articles you will produce. So if 1 dozen can be produced in 3 hours, 20 dozen would be produced in 20 into 3, 60 hours. So now we have the pre-information that we need. How much time did he actually work? And what should be the standard time in which this kind of job or work has to be completed? And what is the hourly rate? On basis of this, let's calculate the wages of the worker under healthy plan. So this is equal to actual hours worked into time rate plus half of or 50% bonus of time saved into hourly rate. So actual hours worked are 48. Hourly rate is 0.50. Instead of time rate, we can also call it hourly rate, HR. 48 into 0.50 plus half of. So what is the time saved? 60 minus 48. You can make a working note of this. Time saved. Standard hours minus actual hours. 12 hours. So 24 plus half of 6 and 24 plus 3, he would get 27 rupees under the healthy plan. Rowan plan, this should follow down here. I'm showing here. The formula is actual hours. So both guarantee the time rate into hourly rate plus time saved upon standard hours multiplied by actual hours into hourly rate. So team row 1 gives higher bonus. What is 12 hours saved? Okay. So row 1 gives higher bonus than Halsey to up to a limit beyond which the Halsey gives more and row 1 gives less. So let's see. It's 48 into 0.50 plus time saved 12 hours, standard hours 60. So he will get 1/5 or 20% only, but not of time saved. 20% of 48 into 0.5. So this is 24 plus 12 on 60 of 24. 24 plus 4.8. So under Rowan plan, the worker seems to have received higher wages. Is this clear? Why is it 24.125? Minu, you're doing something wrong. Did you apply here 12? So Rowan does not apply the bonus on time saved. It applies the bonus as a fraction of in proportion to the time saved upon standard hours, and this proportion is applied to the actual wages. How many times do we need to revise daily? As much as you can. There should not be anything stopping you from learning and practicing till your exams are near. The, the more you do it, the better it is, or at least faster it is. Theoretically, I would suggest you read the entire study material, at least everything for once. And then later on, once you've understood the concepts, so then onwards, you can start practicing and revising numerical portion if you think that is more relevant. But should not skip the theoretical aspect, because the more stronger and fundamentally strong and sound you are theoretically, the better you become. All right, team. So this is the Halsey and Rowan plan that we have discussed. Uh, okay, Hindu. I'll try my level best. Okay. So here also, रोवन प्लान एंड हेल्से प्लान में हम देखते हैं, वी हैव टू सी दैट कि उनको कितना बोनस मिलना चाहिए. अंडर हेल्से प्लान एवरीवन गेट्स टाइम रेट, तो सबको मिलेगा, बट बोनस कितना मिलेगा? जितना टाइम बचाया इनटू आर्ली रेट, जो रेट होगा उसका हाफ. बट रोवन प्लान में यू गेट द बोनस एज जितना टाइम बचाया डिवाइड बाय स्टैंडर्ड टाइम, और वो प्रोपोर्शन हम अप्लाई करेंगे एक्चुअल वेजेस पे जो उसकी बनती है. 48 इंटू 0.5, 24 उसकी एक्चुअल वेजेस बनती है, उसका 12/60 का प्रोपोर्शन उसको बोनस मिलेगा. सो वी सी दैट इनिशियली बोनस इज मोर फॉर द रोवन प्लान and less under the Halsey plan. But there will be a time when bonus under Halsey and Rowan plan will be exactly equal. And beyond that, Halsey will give you more bonus. Why? Because the formula here is actual hours into hourly rate plus half of standard hours minus actual hours into rate. Whereas the bonus under Rowan plan is actual hours into hourly rate plus time saved, which is standard hours minus actual hours upon standard hours. And this is applied to actual hours into rate. So you will see that this is common for both. So if we eliminate the basic time, the only difference is created because of this. Okay. So if you will look at the two equations, half standard hours minus actual hours into rate is equal to standard hours minus actual hours upon standard hours multiplied by actual hours into hourly rate. So once again, you see that everything is in multiplication, so this gets cancelled. So if you have half into rate is exactly equal to actual hours by standard hours into rate, which means when actual hours and standard hours have a proportion of 1 by 2, they will both give the same answer. So in this question, we can try if standard hours were 60 and actual hours were 30, when actual hours by standard hours is 1 by 2. Just see how much bonus will Halsey give. Half of time saved. Time saved is 30 into 0.5, which is 15 by 2, 7.5. And here, time saved 30, standard hours 60 into actual hours into hourly rate. So once again, 30 by 60 becomes 1 by 2 and 1 by 2 into 15, 7.5. So I'll keep it till here today. We'll take up day after tomorrow all your remaining part of the labor cost. I would request you all to do as much possible through your study material and whatever we have covered, and then we will continue from here. Okay? Take up some difficult and typical questions, how you apply these things in the real life problems. So thank you so much. I hope everything was clear to you. Thank you. Bye. Yes, we are done. Thank you. Bye. Good day, ma'am. All of you. Thank you. Good day, Manish. Thank you.